On today's Hashi, I'm discussing the June rental report, international real estate transactions, and weekly unemployment. Today is Thursday, July 18th, 2024. I am Byron Lazine, and the Hashi starts now. Good morning. Welcome into today's Hashi. Let me know in the live chat which market you're tuning in from. And also let me know if you attended the BAM BBQ yesterday afternoon. Thank you to so many of you that were on the live BBQ portion. Really, there we go. Tiffany had a great time at the BBQ. Thank you, Tiffany, for attending. Really big success. And so thankful to so many of you guys for making that a fun digital event, the third main digital event. Wait till you see what we have planned for the fourth digital event of the year. We haven't released that, but we have released BAM Mania, which is our live event of the year, bringing everybody together. BAM Mania, of course, will be in Las Vegas October 17th and 18th. 17th is the VIP portion, with the 18th being the main event. Hope to see you in BAM Mania. Early bird pricing just ended last night, but don't worry. If you're a BAMX member, you still get 25% off of BAM Mania. BAMX members also, and congrats to all of our new BAMX members after yesterday. BAMX members also get access to BAM BBQ right inside of the BAMX platform if you want to rewatch that. If you're not a BAMX member, use code HOT to get into BAMX today. I release all of the hot sheet show notes and the downloads from this show each and every single day right inside of BAMX, along with our courses, all of our live streams, and our community there as well. All right, we've got a June 2024 update from Realtor.com. This is on the median asking rents and the entire rental report. Okay, hopefully we can get a Jerome Powell email address and send this over to him. This has big implications on where inflation might be heading in the future. Now, Jerome Powell spoke this week, and he said, we will not wait, and he said this in the past, we will not wait for inflation to get to our target of 2% before we start cutting. Once we have the belief that we're heading there, that's when we're going with really the belief with firm conviction that we're going to get to our 2% target, or we're trending in the right direction. That's when we'll go ahead and start to cut. So bettors, investors, they've got that little like Vegas-like ticker of what do investors think is going to happen. Where are they placing their bets? You've seen the stock market go up here recently. They're placing their bets that with 100% certainty, September's meeting is when the FOMC is going to go ahead and enact the first rate cut in some time. There is a meeting coming up July 25th and 26th, and there's some outside hope that maybe they will cut then. There's not significant hope or significant belief that that's going to be the case, but maybe if they get enough information, they'll start cutting earlier. I think Washington, D.C. would be thrilled with 2 cuts before November. Powell has said he's not going to let politics influence his decision. That being said, he gets brought up with politicians all the time. Obviously, the Republican nominee for president, former President Trump, says he wouldn't fire Fed Chair Jerome Powell. CNN's headline is "Don't hold your breath." Obviously, former President Trump has been very critical of Jerome Powell. Trump saying, "I'm not going to go and fire him. You've got a position that you can fulfill and fulfill your term." I think his term would end in 2025, so it wouldn't be that. No, his term concludes, in 2026. So that would be 2 more years of Jerome Powell. Maybe just trying to create stability there. Obviously, that message could change. Certain of that. What I do want Jerome Powell to do, and the FOMC, is change how they're looking at our inflation numbers. Because if you consider what's really happening in real time on these rental reports, it's a trend that has almost for a full year now been a rent decline. Okay. June 24th, June 2024 marks the 11th year-over-year rent decline in a row for 0 to 2 bedroom properties observed since trend data began in 2020. Asking rents dipped by $7. That's down 0.4% year over year. Of course, we had, you can't talk about Trump without talking about Biden. Of course, we had Biden make an announcement that they are going to propose to put a rent cap on rents. Okay, so that you can't have a rent that gets out of control. The Biden admin announcing, this is from the Now Bam Instagram, announcing proposal to cap annual rent increases at 5%. Biden did say that they're going to cap those raises at $55. That appeared to maybe be a speech blunder. The actual proposal is 5%. So that's going to be for landlords with more than 50 units. Okay. So he's looking to continue to keep rent prices down. Of course, overall, this is where a lot of the government officials will focus their energy and attention, is the rent side. I have a problem with that. I think we need more purchase supply. I want Americans to own something. So there you go. Looking to cap rents, but rents have been naturally just here in the marketplace on a decline. Okay, so rents decline again, according to Realtor.com. Nationwide rent is just 0.6 below its 2022 peak. So this decline doesn't mean that prices have necessarily fallen, but you're not getting that appreciation that you had during the 2021, 2022 years. Just 0.6 below the peak, obviously. All units saw waning rent declines. So every unit, meaning studio, 1 bedroom, and 2 bedroom, are seeing rent declines. And that's been the trend here now for quite some time. Jerome Powell has said, you won't actually see this data for up to 2 years, which means we're another year away from seeing it in the CPI. National rents by unit size. Median rent overall is $1,700 across the country. Might be higher in your market for sure. Rent change over the last 5 years, that's up 21.2%. Studios are just under $1,500. It's a lot for a studio. Down 1.2% year over year. So studios down the most. 17.6% up in the last 5 years. 1 bedrooms over 1,600. They're down 1.1% year over year. But that's still up 19.5% over the last 5 years. 2 bedrooms down 0.3% year over year, up 23% in the last 5 years. When we talk about inflation, we want to see, coming down to 2%. These numbers are better than 2% as it pertains to the rental market. Yet when you look at the CPI, the vast majority of the CPI is driven by shelter. That speaks to how much lagging data is in the CPI, the inflation reports. Okay. So Powell has said himself, you might not be another year, but if you know in a year that this data is going to show up in the CPI and show shelter moving down or inflating rather, then wouldn't that encourage a potential rate cut now, sooner than later? He said himself he's going to start cutting rates before we get to the 2% when he has the data that shows we're firmly heading towards it. This real-time data from sources like Realtor.com and others, they're not the only ones reporting rents coming down, would show you that the numbers are coming down. Now, doesn't mean that these numbers here on the right, 21%, 17% up, doesn't mean you're going to have a rent decline of 20%. What's happened the last 5 years on rent increases, that's going to stick. Just like the new price of milk, it's going to stick. Okay, just like the new prices of insurance, those are going to stick. They're not going to go down. Problem is, you don't want them to keep going up from here. Okay, prices aren't coming down. It's really about getting inflation, the speed at which they go up, to be normalized. That's what the fight against inflation is all about. You're not going to see prices go back to 2019 levels on nearly anything. Here are the top markets experiencing the fastest rent growth versus pre-pandemic time. Tampa's up 40%. Miami's up 40%. Indianapolis up 37.5%. Pittsburgh up 37.5%. Sacramento's up 35 plus. Virginia's up 32 plus. New York, Jersey City area up 31 plus percent. Cleveland up 30 plus percent. Raleigh up almost 30%. And Birmingham, Alabama up almost 30%. Those are the top markets experiencing the fastest rent growth. The least expensive rent on the list there would be Birmingham, Alabama at $1,300. Indianapolis at $1,350. Those are I'm sorry, Cleveland would be the least expensive at $1,200, just over $1,200. You can get an average rental in Cleveland for $1,200. Indianapolis was the top market in the Midwest, experiencing the fastest growth. It's also been, obviously, for this reason, Indianapolis has been very attractive to investors coming into that market. You can still buy a property very affordable in Indianapolis, below the median price point in the country. And as they come in and turn those into rentals, you're probably and start bumping those rents up. Might be one of the reasons why you're seeing that in that market. Here are the 50 largest metro areas. According to this Realtor.com June 24 report, Atlanta is down 5.7%. So where we've seen a lot of supply come in, we've seen bigger drops. Atlanta down 5.7% year over year. Austin is down almost 10% year over year on rent appreciation. You can get a median rent in Austin for under $1,500. It's a pretty major part of the country there. You get a rent under $1,500. I would say that's affordable. Bobby, Northeast guy, affordable, $1,500. What do you think? Definitely affordable. Okay. What was your last rent in Stamford?
$27.80 with parking spot and utilities.
$27.80 in Stamford, Connecticut is what Bobby, the head of video here at BAM, was paying in Stamford, Connecticut. So $2,800. You had one parking space or two? One parking space. Way to go. One parking space. And so you had to fight for your life on the sidewalk for the other car?
No, I just didn't buy it. I only had the one car.
You just one car. When you're paying $2,800 a month, you don't have a second car. You just do the one car deal. All right. So yeah, I would say to be in Austin, $1,500 on the median, that's pretty good. Okay. Charlotte down 5.2%. Big increase in inventory there. Obviously, when I say a Stamford, Connecticut, not a lot of inventory there. So they're pushing price in the Northeast, where you don't have a lot of for sale inventory being built, or multifamily, not like other parts of the country. Jacksonville down 3.7%, Memphis down 3.6%, Vegas down 3.1%, Nashville, that's an area where you've seen a lot of multifamily new being built, 8.1% down. Orlando down 5.9%. San Antonio down 8.2%. And Tampa on the list at down 2.3%. Okay. There's your rental report in real time from Realtor.com. Love to see the FOMC consider real-time data as they look to July 25th, July 26th on their next FOMC meeting. Okay. Moving on from rents and going into international transactions in the U.S. residential real estate market. NAR put out a 2024 profile of international transactions in the U.S. residential real estate market. It reveals $42 billion in foreign buyer purchases and highlights key destinations and trends happening from last year to this year, so year over year. The United States is the largest economy in the world and attracts people globally due to its opportunities for living, working, and studying. And how about you throw in the word freedom there? Importance of international clients. International clients represent a significant market segment for realtors, for agents. International clients representing $42 billion in buyer purchases in recent trends here. So the annual survey has been going on since 2009 from NAR. The 2024 survey covers these transactions over the last year. That's April 2023 to March of this year, and now releasing that data here just recently. The survey was sent to 150,000 realtors. Might be about the same number that actually do business, right? We know, about 800,000 realtors don't do any business. There was 17,060 of the 150,000 that responded. And out of that 17,000 plus responses, 1,400 reported an international residential foreign buyer. Okay, so pretty good sample size here from NAR. You look for, a true survey, you want to be over the number 1,000. They had 17,000 responses, and then 1,400 of them, of the realtors, actually had this experience. Okay. There are two client types: non-residential foreigners, type A, non-U.S. citizens with permanent residences outside the U.S. And then you have resident foreigners, type B, a non-U.S. citizen with recent immigrants or non-immigrant visa holders residing in the U.S. for more than 6 months. Okay, so some of the key findings were the $42 billion, of course, that I mentioned before, for foreign buyer residential purchases. That's 2% of the 2.1 trillion in existing home sales. So you do see some based headlines out there that say, oh my gosh, foreign buyers are buying up so much of the real estate. It was 2.2% even of the purchases in the last year. Okay, so it's 2.1 trillion. It's a good amount of dollars, but it's 2% of sales. So 2 out of every 100 sales, foreign buyers. And then obviously we've already debunked so many times here on the hot sheet that investors are buying, are not buying all the properties. I would imagine a lot of that 2% would be classified also in the investor bucket. Okay. 54,300 foreign buyer existing home purchases, 1.3% of the 4.0 million existing home sales. Residency of buyers, 57% of foreign buyers reside in the U.S. So yeah, that would make up 43% of those purchases being being in the investor category. Here's the top destinations right out of your hot sheet show notes, available, of course, for all BAMX members. Florida, 20%. That's a preferred destination. Texas, California, Arizona, and Georgia are the top destinations for foreign buyers. Obviously, Florida and Texas are a top destination for U.S. citizen migrants as well. The last number of years, the median purchase price for these foreign buyers, $475,000 compared to $392,000 for all U.S. existing homes sold. So pushing price a little bit. They want more of the expensive or luxury option in markets. It appears all cash purchases. 50% of foreign buyers paid all cash compared to 28% for all existing home buyers. So foreign buyers see it as like, where can I put cash that has overwhelming safety? U.S. real estate is seen as one of those buckets. Okay, so when people, what do you think the future of my investment here on U.S. real estate? Well, foreigners don't have as many options, obviously, maybe as Americans do with their investments, and they want to flock to the safest asset that they possibly can. Okay, obviously, everybody they've got access to Bitcoin. Most of them do. But you see a lot of, trillions of dollars here coming to U.S. real estate as a safe investment. So that's another signal of how strong the U.S. market has really offered stability for people that want to put money somewhere. Here are some of the countries where we're attracting most foreigners. Canada is top of the list. 13% of foreign buyers, 5.9 billion. China is at 11%. Mexico's 11%. India at 10%. And Colombia at 4%. Okay. There's a little bit of data there. We've got more data. And actually, there's 3 charts associated in the BAMX hot sheet show notes and downloads. So you can grab that if you're in an international market. This would definitely be information that I'd go ahead and take a look at. Here's the GDP growth, annual percentage change, U.S. compared to other countries. You see U.S. being, and then emerging and developing Asia being the only 2 on the uptick. The Euro area, the world, as well as Canada and Latin America and the Caribbean. Come on, Carib, let's go. Give me I should have bought me some Caribs yesterday instead of those Coors Lights for the BAM BBQ. If you've had a Carib beer, you know what I'm talking about. All right. So U.S. and emerging and developing Asia. How is Asia still considered emerging and developing? That's beyond me, my pay grade. Tourist arrivals to the U.S. on the uptrend right now. Been on the uptrend last 4-5 years. Monthly tourist arrivals to the United States. Canada also showing, or Canada being amongst the most tourist arrivals coming into the U.S. After that, it's Canada, Western Europe, and Asian tourist arrivals. Okay, so America continuing to be an absolute hotspot, not only for tourists but for those that are making an investment. Here are some of the home price comparison rather among global cities and U.S. metros. Price per square foot in Hong Kong is $18,000 price per square foot. Compare that with the tops in the U.S. San Jose is at $10,000. Singapore is $17,000 a foot, while Anaheim, our number 2, is at $7,900. So another reason why American real estate is an attractive asset. Switzerland is $17,000 plus per foot. San Francisco, seen as one of the most expensive markets in the country, obviously, is only at $7,500 only per foot, or they have it per meter. What the heck? Why the heck do they got this thing per meter? Okay, per meter. What's the difference between a meter and a foot, Bobby?
One is metric.
I know one's metric. One is
meter.
Like, what is the difference in inches?
Meter shorter.
Meters a little bit shorter. Okay, so that'll inflate those numbers per square foot. I'm sorry, this is all per meter, per square meter. Israel, Tel Aviv is 17,000 per square meter, while Honolulu is 6,200. Okay.
1 meter is
1 meter is what?
3.25 feet.
Is what?
3.25 feet. 3.28.
Oh, so a meter is like a yard more than a foot. Okay, so meters more. Okay, so that's where we're seeing these numbers be pretty big. All right, that makes sense. Okay, so a meter's more of a yard. Sorry guys for showing you my inability to know the metric system. Okay, Canada 12,500 per square meter. Naples, Florida, $4,900 per square meter. That's now more than LA, Seattle, Boston. Boy, maybe made the wrong choice there being in Naples. All right, so there's a whole bunch of data, full report from NAR. A lot of really good data, a lot of good charts. If you're in a market that is attracting foreign buyers, foreign investors, if you're looking to attract listings from foreign home owners, there's a bunch of data in here that you could tap into. Annual foreign investment in U.S. existing home sales, that 42 billion was a decrease by 21.2%. So that number declined, and it's actually the fewest this past year since NAR began measuring in 2009. Okay, so that speaks a lot to those global numbers that we saw. Global economies are doing even worse, or doing much worse, rather, I guess would be a better way to say it, than the U.S. economy. Okay, we've got a jobs report here, new release this morning on unemployment. The week ending July 13th, the advance figure for seasonally adjusted claims was 243,000. It's a decent pop there, an increase of 20,000 from the previous week's revised level. The previous week's level revised was up by 1,000 from 222 to 223K. The 4-week moving average now is 234,000, an increase from 1,000 from previous week's revised range. And you can see the trend line here. The last 3 months has been, a move up. So unemployment now being at 4.1%. Higher than, again, where we had expectations, being at 4%. And we are seeing a trend moving up. So this softening of the labor market continues. It's another check in the camp of maybe we get an FOMC decision that leads to rate cuts sooner than later. It seems like certain to be September, maybe not as quickly as a week from now on their next meeting. 10-year still, moving overall down. I mean, if we look at the last month, that's since the beginning of July, we've been on an overall downward trend now. Today, sitting here at 4.173. The 30-year fixed rate yesterday came in a tick lower than the day prior, coming in at 6.83 to end Wednesday. We've been living sub 7 here for a number of days now, and hopefully we can continue to move forward. I outlined yesterday on the hot sheet that there could be a chance we get into sub 6.5 territory just based off of when we in quarter 4 of last year, when we peaked at 8 and went all the way down to 6.5, just based off of how the market reacted to a belief that we were going to get a rate cut in the near future. There was belief that we might have a rate cut in quarter 1. Obviously, we had hot inflation quarter 1 that completely went out the window and off the table here earlier this year. But now that belief's back, there's a case to be made that as the spread between the 10-year and the 30-year improves, also as we get closer to maybe that rate cut, we could get sub 6.5. I was talking to a lender yesterday. I mean, he's like, anything can happen. We've seen 0.5% 30-year fixed swings. We could be sub 6.5 next week. We could be there this afternoon. Like, that's how quickly it's happened a number of times over the past couple of years, where you get these kind of volatile swings. So you could see that again. Also, the same lender told me that yesterday, when we had this 6.83 on the Mortgage News Daily, yesterday, very qualified buyer, okay, putting down, I think, upwards of 30% down, and obviously very well qualified, locked in under 6% at 5.99, buying down a point. So you're starting to hear that. He said it was the first time he actually locked somebody in with a 5 in front of it, outside of some type of first-time home buyer program or something like that, but a conventional deal with a 5 in front of it in quite some time. So do we start to hear more and more in our markets of those situations where, hey, a very qualified person can get a 5 in front of it? That's going to move the needle for a lot of people in their decision-making process to go ahead and move forward with that purchase, and potentially obviously add some inventory to the market with their home sale, because most buyers are in fact sellers on the other side. All right, great week here with all things happening at BAM. Thank you for your continued support. Thank you to those who attended BAM BBQ. BAMX members, obviously, if you missed BBQ, it's available for you inside of your BAMX platform. If you want to join the community, the growing community, especially after yesterday, of BAMX members, use code HOT to get 10% off of BBQ. BAMX members, remember, still get 25% off of BAM Mania. Go to bammania.com to grab your ticket today for our October event. Seats are filling up. You can check out the released speaker list on bammania.com. October 17th and 18th in Las Vegas. Nevada, October 17th is the VIP portion, the 18th being the main event. Hope to see you there. Hope to see you inside of BAMX, and I hope to see you at the very least in the comments section here tomorrow on the new Knowledge Brokers podcast over at Knowledge Brokers podcast channel, as well as back here on Monday as we kick off the hot sheet. And we do this every single week, Monday through Thursday, if the markets are open, 9:30 on the East, 6:30 on the West, for your only live 24-hour look back on the housing market on the internet. Hot sheet and everybody at BAM, hope you have a great Thursday and head into a very safe, healthy, productive weekend. Until next time, of course, toodaloo.